Alright everyone, Cowboy Trades here, welcome back to the channel for another quick update on KDA. So, the next trade for Kadena is finally here. If you're a veteran of the channel and you watched my previous video, you already know exactly where I entered this trade from and where I think we're going down to next. If you're new to the channel, warm welcome, no worries. What I'm going to do is I'm going to start off this video talking about lower time frames, higher time frames, what's changed since I've been going on, oscillators, momentum indicators, technicals, everything you need to know about what Kadena's situation is currently sitting in and where I think it's moving down to next. So let's start off on our first chart. This is the reversion to the mean chart. Now, veterans of the channel absolutely know that I love shorting reversions to the mean and I love trading from positions of strength. So when I did make the previous video about 4 days ago, I was bearish, but I said yes, if I was going to be entering this trade, I would need to see a position of strength, and that position of strength would come in the form of moving up to the long-term moving averages on the top of these daily EMA ribbons. That was approximately a 16.69% increase, and I said, hey, if we push up this much, then I will be entering a short. We pushed up 17.56%, so we pushed up about 1% higher than our entry. As you all know, if you watched the last video, I'm using a 3x short, so very conservative right now, and we have triggered this and we're starting to push down to the downside. So let's look at these reversions to the mean. Now, almost every, well, I say almost, since the EMA ribbons have even spawned in for Kadena, every single time we revert back to the long-term moving average, we get absolutely thrown back down to the downside, without exception. And the last time we made a trade for Kadena was actually round about here, over the 4th and 5th of November. I'm very conservative with my trades. I'm very happy to sit on the sideline for a month or so. And it's actually funny, from the 5th of November, 4th or 5th of November, over to the 4th or 5th of December, it's been exactly a month since the next reversion to the mean. And the last time we traded this, we used a 10x leverage and we came down all the way to this $1 price target, meaning that we had two trades that were in 2.8x profit, or 280%. So it's fair to say that when we do come up to these reversions to the mean, when I do enter a trade, I'm extremely confident. So right now, I am absolutely sitting in my short 3x leverage from 112. I'll talk about the take profit in a second, but did just want to let you know the reversion to the mean is most likely fully complete at this moment in time, and I'm extremely confident sitting in my trade right now. Now, let's move on to a slightly different chart, get rid of the moving averages. I actually noticed something quite interesting, and let's talk about it. So originally, you do remember we talked about this head and shoulders pattern with a price target down here at 84 cents. That price target has obviously been hit and done now. We've moved to the upside of this, but here's where things get interesting. We originally drew this head and shoulders with a neckline over around about 134, 136. And if we remove this, what's quite interesting is this may have actually not, in hindsight, been the best way to draw this. And let me show you why. If you were drawing it from the neckline down here, you can actually see we didn't properly revert back to form this left shoulder. And when we came to the right shoulder, you know, we weren't anywhere near this. So what I'm going to do right now, get rid of this, don't know why this has just spawned into my chart, but what's interesting is if we focus on this descending trend line right here, let me make it a little bit thicker, free should do it, so boom. What's interesting is candle body closes for the left shoulder were right on this trend line. Candle body closes for the left shoulder completing were right on this trend line. We pushed up for the head and we came back down, and then this is where we were like, okay, this is a mini right shoulder, but here's a different way that you can draw this, because this actually lines up with the candle body closes for this head and shoulders pattern. Now this is a little bit ugly, but you can see candle body closes left shoulder, candle body closes head, candle body closes up to the right shoulder, and boom, we broke down to the downside of this. And where did we quite recently revert back to? We reverted back to this trend line, and it looks like we're getting ready to roll over. How do I know we're getting ready to roll over? Well, in a second, I'm going to talk about the oscillators and momentum indicators, which really do highlight to me that we're probably not going to be pushing up much higher than this trend line. It is possible, hey, we could come up to, you know, 114, 115, but from my entry at 112 on a 3x leverage, I am absolutely sitting peachy and not worried about any of this. But like I said, let's move this back. If we are focusing on this right shoulder here, if we are looking at this head and shoulders rather, there is actually a different price target than the one that we originally quoted. So you can see if we pull up the head here, it's slightly more aggressive to the downside due to the nature of not having a flat trend line, having a descending trend line. And you can see if we move this over to the point of breakdown, this would actually be calling for a 68, well, it's 68.82. So bear in mind, this is a 69 cent price target. That's very interesting. We've talked about this price target before, and we'll talk about that again in just 1 second. Now, let's move on to the oscillators and momentum indicators and other narratives which, like I said, make me feel that we're not going to be pushing up higher than this trend line. So let's look at the oscillators. Starting off over on the squeeze momentum indicator, you can see we have slightly pushed up into green territory, meaning in the extreme lower time frames that bulls were taking control of this market, which we obviously know. I mean, we've pushed up from 78 cent to, you know, $1.15 or so. So in the immediate short term, bulls took control. You can see the squeeze momentum indicator ticked over to light green. But here's what's interesting. Let's look at what's been happening for Kadena literally since the past year. I mean, this volume profile over here that started round about the 11th of October, you can see huge not volume profile, sorry, huge run up in the squeeze momentum indicator, and then you had a top, you had a lower high the next time, you had a lower high the next time, you had a lower high the next time. Bear in mind, this was a tiny little dimple over here. I'm not even gonna, you know, consider this data point. And then you can see over here you've got a lower high from this point. And what we're doing right now, what do you think? Let's zoom in. Let's get rid of this, boom, boom, boom. And if we draw a line of best fit, bear in mind, I'm saying a line of best fit, not a trend line. I don't recommend that you draw trend lines on the squeeze momentum indicator. I'm really just drawing this as a line of best fit to characterize downtrend, downtrend, downtrend. So in my opinion, squeeze momentum indicator running into resistance, and also it's just extremely weak and flatlined right now. And if we look at our other oscillators, that will become extremely apparent in just one moment. So look at the MFI. Right now, the money flow index, a lot of people like to use the RSI, and they also like to use the volume at the same time. Get rid of all of that. Don't use these metrics. Get rid of the RSI, get rid of the volume. Use the MFI. It's basically like the RSI, but it takes into account the volume, so you don't have to have these, you know, ugly volume candles all over your chart. So if you do watch my videos and wonder, why does this guy not have, you know, volume, any volume candles on any of his charts, it's because I look at the MFI, and it does all of that for me. So MFI is currently pushing up to round about 80.68, which is the highest that it's been since November 2021. But being a little bit more conservative, you can say we've basically run back into the same zone as we were in August. So let's see what happened. What happened the last time that the money flow index pushed above this 80 mark, meaning that we are completely overextended? Well, let's look. Let's place a horizontal ray exactly on the peak, and boom. What did that peak correlate to? Well, the volume overextension in the market correlated to this top right here. It's a little bit hard to see because this is green, so I'll get rid of this, but you can see, you know, this is the top over in the MFI. This is also the top over in the stock RSI, which we will talk about in just 1 second. But from this point in time, how long did it take before even the next minute bounce? It was a 42% drop before we even had, you know, a tiny dead cat bounce. And you can really see the markets weren't the same since we topped out, and we more or less just slowly chopped down about 68%. Now, am I saying that we're going to break down 68% from this moment in time? No, that's not what I'm saying. I'm just highlighting we're extremely overextended on the MFI right now. And if you basically look at every single MFI peak, they always correlate to some nasty drawdowns in price action. So you can look at this yourself, and you can also see on the reverse as well. It doesn't work as well in a bear market because we are so weak right now. But you can see times where the MFI bottoms out and you do have a slight move to the upside as well, like this big one here. But we've got the inverse of that right now. We're very overextended for the MFI. And subsequently, looking at our other charts, we're running into resistance. We've confirmed this neckline of this head and shoulders pattern, and we've also reverted back to the mean, which is another reason why the MFI, you know, all of these oscillators, these momentum indicators are completely overextended, because we've reverted back to that mean bearish trend line. Now, if we look over on the stochastic RSI, we're absolutely overextended. We haven't been this overextended since the 19th of July. You can see we touched here, broke down. We did push up because the stock RSI came all the way down and started to push back up again, but then you can see this top over here was that start of that nasty rundown. Had dead cat bounce, stock RSI topped out, we continue to roll back down further, push back up again. Stock RSI topped out, we continued to roll back further. Stock RSI pushed up again. We didn't top at this exact range, we broke down, confirmed basically a double top type scenario over here, testing the top of this range before breaking back down. What happened? Stock RSI bottomed out, we went on a run to the upside, and now stochastic RSI is crossing bearish as all the other momentum indicators are screaming, hey, we need a break, we need to take a 5-day break. It's like the bulls have been running on the treadmill when they're absolutely out of steam, theme, and bears are now coming in to feast on their carcasses because they can't run away from the bears fast enough. All the momentum indicators are flipping bearish, and it's definitely not looking good if you're bullish at this moment in time. Now, in the higher time frames, let's look at the volume profiles, because where we pushed up to, let's see, we pushed up to 115 on most exchanges. So over here 115, over here 114, over here 113. So on average it's, you know, round about 113, 114 or so. And let's see where this range correlates to. So boom, right here 107, and you know, this is the start of the next volume cluster up here. But this volume cluster was more or less what we reverted back to, and this was another reason why in the previous videos we said, hey, this is not a position of strength to short from when we were down here. If we push up to the next volume cluster to the upside, grab some liquidity from this range, oscillators start to turn bearish, you start to retest necklines, you know, you come back into the reversions to the mean on the EMA ribbons, it's probably going to be time to start rolling back down to the downside. So we've grabbed liquidity from the next volume cluster. Do bear in mind, this says that it pushed up to, you know, 129 or so, but that is not the case for the majority of exchanges. And you can also see what's interesting is if we drag this range out, so, you know, encompassing these floors over here and also encompassing this floor before, obviously the major meltdown, because I know you can see, you know, this was the floor, but we kind of broke down, solidified a new floor for a little bit, and then that's when the nuke happened. So this is the bottom of the range in my opinion, and we broke down, pushed back up, reverted to the top of this range, or the bottom of this range rather, and now we're tipping over to the downside. So in terms of the volume profiles, where is the next area that we're going to be magnetized to? Let's find out. Over here you can see, boom, 69 cent is this next major volume cluster to the downside, and we've also got an even greater volume cluster down here at around about 51 cent. But as you do know on this channel, we like to take price targets and trades one step at a time. So in the immediate short term, where do I think we're going down to? Well, I think we're going down to exactly where I said we're going down to in my previous video. Where am I entering from? Exactly where I said in my previous video. What leverage am I using? 3x, exactly like I said in my previous video. Sometimes people ask me over on Discord, if I, for example, make a video on KDA and, you know, it takes 4 days to come up to the entry, people ask me, you know, have you entered this trade? But you don't need to ask me these questions. If I have made a video about it, I'm a man of my word. If I'm saying I'm going to short from this level up here and we come up and hit that level, there's absolutely no way that I'm not going to follow through with that plan. And if anything changes, I'll make another video and let you know that my thoughts are changing. If I haven't made a new video, if I haven't made a new post, then nothing's changed. And of course, like I said, I'm a man of my word. We pushed up to this level and I have entered my next short. My liquidation is all the way up here at around about 149, technically 150, but after fees probably 149 or so. So let's look at what's happening. Like we said, head and shoulders price target, this was taken out a while ago, but we do actually have a new head and shoulders price target down here that we do need to update. What is this? Once again, 69 cent. Where is this coming into confluence with the volume profiles at 69 cent? Once again, technically 68, but this is, you know, 68.8. So basically right down here, we do have a good amount of confluence in terms of the volume profiles, the head and shoulders, and, you know, with momentum indicators absolutely overextended. You know, the stock RSI pushed up to 100, and, you know, your MFI as well. And I had to check because I was so surprised that the MFI pushed up this far. Sometimes, you know, on some exchanges, it pushes up just because there's a lot of volume on that exchange. So I was like, let me make sure that the MFI is really this overextended on every single platform. And yes, the money flow index became absolutely overextended. The only one that it isn't is over on Bittrex, and this chart is a little bit broken, so I don't really use this for oscillators. I only use this for lower time frames, and the reason I say it's broken is because once again, you can see we broke down to 31 cent and then we pushed up to $1.28, and on every other exchange that is absolutely not what happened. So I just use this for looking at the volume profiles, to look at previous areas where data has been accumulated, because, you know, this is all I really need this chart for. So once again, where am I shorting from? 112. I'm already in the short. 3x leverage. I think we're coming down to the volume profiles at 69 cent. And from when we entered our trade, I know it's only been about a day or so, so I'm obviously not expecting a crazy amount of profit because, you know, once again, you know, these momentum indicators are only just about to turn tail and run to the downside, in my opinion. But you can see we're currently down about 4.6%, so round it up to about, you know, 5% or so. So we're about, you know, 15%, just under 15% in the profit at this moment in time. So am I confident in my trade? 100%. I always love shorting from these positions of strength. And, you know, once again, we left you over on the 1st of December. We could have said, hey, we're bearish now at the bottom of the short-term moving averages, so let's enter a trade from here. But no, we said we only take the best trades. We do not chase trades, and we let trades come to us. And there was also a few times where if you do come over to this chart over here on the daily time frame, you can see... So I made this video over on the 1st, boom, right here. You can see after I made this video, we pushed up to about 109, and it could have been tempting to enter a short from there, but we held our horses. We waited for the trade to come up, and you can see many times we were slowly grinding up to this area where I thought we were going to come up to and get rejected from. And once again, we were very patient. We didn't chase the trade. We let the trade come to us. It took 4 days, but now we are trading from a position of strength, my friends. So I'm extremely confident in this next trade. I think we are going to come all the way down to our 69-cent price target, which is a 40% drop. So, you know, your 40 times 3, this is 120% profit, or a 1.2x return if we do come down to these lower levels. So that's pretty much all I've got for KDA. I did also want to just very quickly update you on the stock market and Bitcoin. I know a lot of people who do watch my altcoin videos especially are probably going to instantly click off, but it is super important to understand why Kadena is breaking down, because Kadena doesn't rule these markets. Kadena is not in a box of its own. Kadena isn't, you know, untethered from everything. Kadena is following Bitcoin, and Bitcoin follows the stock market, and the stock market follows financial conditions. So knowing how these all tie in together is very important. I just really wanted to give you a super quick update to let you know, in terms of the S&P 500, we have pushed up to the mean trend line, and it looks like we're starting to nuke to the downside. And in terms of Bitcoin, we've pushed up to... didn't mean to do this. We've almost pushed up to the bottom of the previous range, which was 17,600, the previous lows. It would be very nice for us to push down, come up to this 17.6, which we've pretty much already done, and then solidify this previous low, which was once support, as resistance, and then that will mean Bitcoin has enough momentum to push down to my next price target of 14k. I don't want to waste any more of your time. I'm going to make a stock market specific video later on, and I may make a very quick update on Bitcoin, but, you know, like I said, I mean, look at what's been happening for the past 5 days. I mean, we are the same price as we were on the 30th of November. So, like I said at the start of the video, I care about my time and I care about your time. I'm not going to make an extensive update when there's really nothing to talk about. So, that's all I've got for you for this episode, my friends. Congratulations if you have entered this short. Good luck on it. That's all I've got for you for this episode, my friends. And as always, cowboy out. Peace.